In today's video, we're going to look at life insurance and retirement and answer the simple question, can life insurance enhance your retirement? I put together a presentation for you all, 5 areas on how life insurance can potentially enhance your future retirement. And whether you could care less about retirement or whether you're in retirement, I believe this video can create clarity and hope to enhance what your future looks like. So here we're going to go into the 5 areas. And area number 1 is actually death benefit. Now, if you follow, again, this channel a lot, you know that when we overfund, a lot of times we're decreasing the death benefit because at the end of the day, we care about the living benefits. We care about the cash. But over time, to make this tax-free, the death benefit has to continue to grow. And, over 20, 30 years of having life insurance, your permanent death benefit is pretty substantial. And so a lot of times we think of like, okay, why do we care about the death benefit? Well, the death benefit is ultimately an asset. It's an asset to your estate. And there's this thing called a life settlement. And believe it or not, there's a whole market of buying and selling people's death benefit because there is a certainty in life. The certainty is that you will die. And so if you're working with insurance companies that have been around for, hundreds of years, that are super stable, that are ultimately hedging on something that is going to happen in your life, that is a contract that will pay out, meaning whether you use it internally or on a market, the death benefit itself is an asset. And I'm actually going to have somebody on this channel soon that is a life settlement broker that talks about how they help clients get multiple of their cash value by just selling their death benefit. Now, this is not advice. I'm not saying to go do this. I'm just saying that the death benefit alone is valuable. And just to prove it, there's a whole market that people can sell their death benefit and ultimately create a greater return than what their cash value has. Number 2 is this thing called the volatility buffer. Now, obviously, volatility is a huge risk. And the reason why we buy into something like the 4% rule or the 3% rule is essentially if the market crashes or if it goes down, or selling your stocks, selling your portfolio when the market's down, ultimately takes the power of compounding and does reverse compounding in your favor. And so it's easier to run out of money quickly. So what Dr. Wade Fowler just pointed out is, hey, if you could have an asset that wasn't tied to the market and tapped into that when the market drops, and wait till it recovers, you can take out a lot more with the same risk of quote unquote running out of money, i.e. have more cash flow now and in the future. And so the volatility buffer is just that strategy. We talk about the covered asset strategy. The covered asset strategy is for those of you that have pensions or want to use annuities, and whether a pension, annuity, they're really both the same thing. And there's usually a couple options that you can pay. Majority of people use some type of joint option. That means you and your spouse need to both pass away before you lose that benefit. And all the pension or the covered asset strategy is saying is potentially, if it made sense for you, you could get a higher payout option because you have a permanent death benefit. And if and when something happens to you, that permanent death benefit covers your asset, allowing you to have more cash flow now, but also making sure that you're not leaving your spouse and family high and dry. So that's an example of using the death benefit to enhance other areas in your life. The reverse mortgage, this is something that can be controversial, and this can be something that a lot of people get passionate about. All I'll say is this: there are strategies using reverse mortgages in the right way that can allow you to have more cash flow. And the stigma behind a reverse mortgage is you're going to lose your house. The kids won't be able to have the house. But if you have a permanent death benefit, it would give you options to potentially get more money efficiently because the money's earning nothing that's in your walls right now. And you can give your family options to keep the cash or take back the house. And so a reverse mortgage is a lot easier to do if you have life insurance, and it's another tool and strategy that you can look at as you're looking at enhancing your future cash flow. And then finally, the future asset tax shelter. This is when we talk about the Rockefeller family and the strategy of having multiple policies on generations and potentially utilizing the policy as it relates to, doing the infinite banking or whatnot. You might have an outstanding loan, and the whole concept is when you pass away, your death benefit has to go somewhere. And so when you have multiple families that are using life insurance actively, death benefit can flow to the next generation. And so you can create life insurance and create space to ultimately get tax-free inheritance. And that's where we're talking about the future asset tax shelter. So this could be for, someone who's a business owner, real estate, you're utilizing life insurance to buy other assets, but you're going to get a windfall someday. This just gives you the ability to have all the benefits of life insurance, all of the benefits of compounding, all the benefits for the future, and give you the ability to put money when there's a liquidity event. And so this is just another strategy that people use in the future. The other thing that I want to point out is this concept of protection protection and legacy. And this is what I write. When life insurance is set up and used properly, it can provide protection and legacy for your family. And this is the point that I want to make is when it comes to estate planning, life insurance is for sure one of the best assets to have. And no one will really argue this. That's the big problem I have is a lot of people are just like, oh, life insurance is just for estate planning. It's just for passing on money. It has no benefit for the future. But again, if it's one of the better assets for estate planning and it gives you the ability to save and use your money and it gives you options for quote unquote retirement and future cash flow, it's just another reason to why we should really understand this asset class and where it can fit in to us. There's asset protection. So this is another thing that's really, really key. And certain states are better than others, but assets can be protected. I know this is an extreme example. I've used this before, but Enron is a super extreme example of there are people that are still getting pensions and still having money, Enron executives who are really, really bad people, but because the creditor protections were so powerful, they still, like the state couldn't take it from them. And I use that as an example of saying, wouldn't it be amazing if we had our money in a place that had creditor protections like this? And then chronic illness riders is something that doesn't get talked about a ton, but this is ultimately, and I can't call it a long-term care rider because it's not traditional long-term care, but what it's essentially saying is if or when something happens to you and you are sick and you're potentially, have a diagnosis that doesn't look so good or you're not able to operate, you could potentially tap into your death benefit prematurely before passing away, and you can accelerate that death benefit and it can be used to help you while you're alive. Again, this is something that in most life insurance is just included in the plan. And it's not one of those things that's why you should do it, but it's just another benefit that should enhance the life insurance in the future, because as we get older, more things like this potentially happen. And so there's lots of other riders and benefits. This is kind of my final thoughts is when we look at where we should have our money, we really need to look at our entire life and we need to look at the next generation. And so I can't just be thinking about if I put my money today, like I'm 26 years old, okay? I can't just be thinking about where I should put my money today. I really need to think that every decision I make has a future consequence. And so for me, I'm not necessarily thinking about retirement every day, but I know when I put my money to work in life insurance, it obviously is that foundation safe asset. I can use it for other things, but I know in the future, there's so many options that open up and there's other things that I'm going to be protected in the future, and it will only enhance future cash flow and only enhance the ability to create a legacy for my family. And so if you want to learn more, we have a lot of different resources. One of the resources that we have below is what we call the And Asset Vault. And we go into way more detail around life insurance. And if you want to talk to someone on our team, the Vault will give you the ability to talk to a specialist that can really answer the question or help you answer the question, can life insurance enhance your future? My name's Caleb. Thank you so much for watching this video.